All right, hey traders, TG Watkins here. It's Monday, March 18th when I'm recording this. Hope everyone's doing well out there. And just a couple heads up things. We're going to be doing a virtual money show in just a couple days on March 20th. So Allison, Joe, and I are going to be together. We're all going to be in the same room talking about the same charts and looking at some things. We're going to see if there are any live day trades that we can take, and they're going to see if there are any setups and actual trades we can take at that time. For something that we can follow up a little bit later. So this should be pretty interesting. We did a little practice run last week. It went pretty smoothly. So yeah, tune in for this. Sign up for the virtual money show. It'll be March 20th when we're doing this. All right, and then I'll show you a couple things that I also posted that this was a screenshot that I took. So this was, if you can see here, is March 15th. So that was Friday. And this is where the market had closed on Friday. And so that morning I said, hey, we should probably, the S&P is coming into the daily 21, EMA. I was like, we should probably expect it to have some sort of support, maybe even a bounce. And sure enough, that's exactly what we got this morning. So you can look over here on the far right, and this is the after hours on, so we can see what happened before the market actually opens. And the market opened with a gap up. And so I was kind of looking at this and said, well, what's going on? Because if we actually look at, so here's the S&P, and this is the 5-minute chart. So yes, there was a pretty big move up this morning. But if I come over here, and then if we look at the NASDAQ, you can see the NASDAQ also had a pretty good move up, something like this. And then if we so I'm thinking, okay, the S&P and the NASDAQ had good moves. What about the IWM? Almost nothing. No move. How about the Dow? Yeah, little move, but not much. So what that tells me is, okay, then this was something that was in the NASDAQ and the S&P, and so I thought, okay, it's probably some FANG stocks, right? Well, as it turns out, so Google had a pretty big move up, so that definitely helped the markets. Apple also had a pretty big move up, decent. And then Tesla had a little bit of a move up, something like that too. So there were a couple of the bigger names that have had moves up today. Now, the only one that looks really legitimate is Google because, that was actually having a good, strong move. Something like Tesla and Apple, they're really not doing that much, so I'm not really interested in them. Now, another way to look at this is FNGS. This is the ETF for the FANG stocks. And now here's another reason why, I'm not too interested in seeing these little moves. And because if you look, really, this thing has not been doing very well. So that tells me that most of the FANG stocks are chilling out or taking a break or something like that. And that is kind of what we've been seeing with the market recently is, well, I think we're kind of getting into this area where either things are topping out or we're starting to see a pullback, or this market is just too tired for the upside and we need to get a prolonged pullback correction, something to that extent. Now, we saw that about 4 months ago right here at the end of the summer. So June, July, August, or is it like July, August, September, and then at the end of October is when this thing finally started to move up. So call it November and then through till, March, something like that. That's a really long move, and this is a really big, this was a good time. We had a lot of big trades up and through here. But we're now to an area where, okay, the market seems like it needs to be chilling out, and I think that's what we're seeing. So even though they're up today on something like Google and whatever, this is not really something I want to be trading. As a swing trader, this is not where I want to be. So we're going to let the market still settle down a little bit. I think there's still some more downside, even though there's a lot of chop. So let's kind of dive into some of the breadth indicators and show you guys what I'm seeing out there. All right, let's get over to this. All right, and then we can show you, here is the breadth. Now, the interesting thing, and this is what I was pointing out to the Moxie traders last week on Friday, is that we really seem to have had a break in the number of stocks over their 20-day SMA. So, yeah, we got up to about 90% back here. That was a good, strong run, but then we should get a pullback, and we did. You can see that there was a bit of a pullback, same thing here with the 50, even a little softening of the 200. And we wanted to see if this was going to turn into anything worse. Like, is this going to be the beginning of the pullback for the market, as we come into the new year? Well, it turns out it was able to actually start to move back up. So they found support, and there was a resurgence. There was another round of stocks moving up and another bullish run that we were able to trade. And look where it went, right back up to about 80%, which is about the area where this indicator likes to start running into resistance and turn around. And you can see there was a pretty stark indication on Friday that, okay, a lot of names, like a healthy number of names, broke down, and they started to get below their 20-day SMA. So the number of trading ideas alongside is getting pretty thin, just not much going on right there. And then we could also see here the number of stocks over the 50-day SMA ran up to a typical number, about 80%, which is too much, too high, too bullish, too many people on one side of the trade. And so we started getting a pullback. Now we just need to see if this continues to move down. I think it will, because I think the market needs to reset, and this is fine. We should look forward to a correction, a pullback of some sort, because that will help give rise to the next round of names. So we just have to be a little bit patient in through here. Then we can kind of look at the new highs, new lows, and this has been really great. We have seen a resurgence in new highs, fantastic. But over the last week or so, you can see that those new highs has kind of fallen off a little bit. Now, new lows, they've kind of been hanging around here. They've had a couple spikes, so nothing really to comment on yet. There was something here. Okay, that makes sense. The market was down. The only other thing to kind of point towards is that new highs, new lows have come up, and we are starting to see them tick down. So that's, again, more evidence of what I'm kind of seeing out there with this market maybe running into some resistance, just a little bit too long in the tooth and needing to cycle back down. We could also look at even the internals for the last few days, and this is the volume, like how many shares being bought versus how many shares being sold. And we can see that for the most part over the last several weeks, not much on the way of negative, actually very, very little on negativity. And most of this was positive, so good order flow. But look what happened on Friday. That was a big day. We had a lot of names ticking down. Maybe it was Thursday, actually. I think it was Thursday. But whatever day that was last week, that was a big down day. And that was the thing that I think really triggered things to the downside and said, oh, something different's happening. Now, today's been a little bit mixed. You can see generally we're positive, but earlier this morning it was still mixed. And I'm really not seeing too much here and here as far as order flow and advancers, decliners. So, I think we're starting to get into that transition period of where we could start seeing more downside in the market. We could also talk about the put-call ratio. And basically I've been saying that this put-call ratio has been broken for the last few weeks, because usually when it gets down to this area, that is a high for the market, but the market continued to push. Okay, fine. So we just kind of recognize and realize that this is an area where any turn to the upside, that would probably be the signal. But until that happens, nothing to worry about. And we might be getting that signal starting to turn to the upside. So just one of those things that we kind of put in our back pocket and start to think about. And then we could actually go and look at some individual stocks. So another thing, if we look at AMD, semiconductors, it was one of the leaders. And we could see that it had a pretty big move last week. But it also got sold pretty darn hard. So, we came up there, kind of rang the bell, and then came back down. And this is another something that I look at this and I'm like, got to be a little bit careful out there. Yes, we've come down to potential support. But if this thing can't really muster a good move back to the upside, we could actually be running into resistance and continue to move down a little bit further. So this is another one of those areas that I'm just thinking, I'm not sure I see it. And then let me cycle back down to the IWM. I always kind of like to look at this as a little bit of a canary in the coal mine. And what have we gotten recently? Well, late last week, we got a Moxie price trigger to the downside. So this also tells me that, hey, we need to be a little bit careful with the market on the long side. We could even go to the RSP, which is the equal weight of the S&P, and kind of tells you what's going on with the rest of the market minus the big FANG stocks, because this is the equal weight. This is telling you, giving everybody a fair shake at everything. And you can see that we've come up here and we did make new highs, which is great. But we did it in such a way that now we are overbought and extended. You can see outside of that 30 ATR, gapping off the 8 EMA, all that kind of stuff. And then we come over to here and here. Notice, and this is where having the Moxie indicator really matters, and I've been seeing this on a few charts that have told me that we need to really be kind of very cautious and high alert on anything that's not working, because notice just how weak, how rough the Moxie indicator on the hourly chart has been. So it took a little bit while to get going, but once it did, as price was moving up here, notice how the Moxie indicator really wasn't that great. It was red and green, it was mixed, and then over the last several days, look at that, nothing but red. Nothing but red. And that's something to really pay attention to as price came up here and got extended on the daily chart, double topped, and then came back down. And again, you can just see that the Moxie indicator is not looking so good. So definitely some things out there to be paying attention to be cautious about. I think that ideas on the long side are thinning out. We took a lot of positions off last week, and just a couple stops have been hit. That's fine. That's the whole point of why we have them in there, to make sure that good trade doesn't go too bad. And then really, I think we need to be careful and say, look, now we're going to get into an area of volatility. The VIX is picking up a little bit, the UVIX is picking up a little bit, and basically we're just starting to see names not really succeeding to the upside. And so I hope this kind of helps you, give you a little bit of feedback of what's going on. And just remember to come over to my X page, profitpilot.com and simplertrading.com, and we'll see you guys there. Thanks again. Hey, TG here with Simpler Trading. Thanks for watching. If you enjoyed this video, be sure to leave a like or comment below. Also, make sure to subscribe and click that notification bell so you can stay up to date with my market analysis. Or you can join my free newsletter with the link in the description. Good trading, and I'll see you at the next video.